On the call this morning, emerging markets lead world stocks higher on a rebound in commodities as Goldman turns positive on copper and crude oil, both up over 1%. Morgan Stanley also raises its forecast for crude by 20%. Is it time to buy back oil stocks? Have investment banks called a bottom in commodities? I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Scott, markets are confusing me. We break the 50-day on Monday, and then now the futures are rallying. What's interesting is there also seems to be just a lot of negative news today. You know, China's growth is slowing. Perhaps Greece will definitely have to default in some way, and futures are up. I don't know. Help me make sense of it.
Well, they discounted a little bit of that yesterday. Yesterday, the indices were very weak. We did break the 50-day moving average, but we held the 100-day moving average. And a correction is a process that doesn't happen in a straight line. That's why you have to maneuver it. So if you take a quick look at the S&P chart, you'll see that we broke. This was the first time we held the 50-day after a move from 1370, so it made sense to bounce off there. It came into this descending channel. Then all of a sudden, we broke through to the 100-day. So now here we are at the 100-day, you know, at a I would say a decent support level. So the question is, you know, will 1325 be resistance, and then will we head down to that 1295 level that a lot of technicians are talking about, including me? And I do think the way the market feels, we might get to that level. So that's why I'm not saying go, you know, fully invested. We've been talking about tier one in some things, but we're still in corrective mode here.
So do you want to be shorting then instead while you look for your go-to stocks and buy points?
Well, I think you have to have like a formula where sometimes, like now, I'm coming in long some of those momentum names that acted well yesterday, but I'm short some spiders. So I'm trying to be short some of the indices or the weak scenarios and buy some of the strength so I can keep maneuvering it until things move together symmetrically, which right now we're seeing divergences across the board.
And you know what's interesting too is there was some data from Capital IQ that came out Monday that 69% of companies in the S&P have actually beat estimates in earnings. And we're in this corrective mode. It doesn't really add up.
Well, earnings season's over. So now we're looking at Europe. Now we're looking at slowdown potentially.
It's
in
not
China,
enough. Earnings are just not enough anymore.
Well, it's different times. We look. The market looks at different things at different times. It depends what it's enamored with. And right now, the market's enamored with the euro, the dollar, what's going on in Europe, some of the things in the emerging markets. So let's watch the price action and the levels, and we'll get to a better spot down the road.
So not panicked. I like that.